Morning, Steve Freed in Chicago with the morning grain comments. Markets and the grains are pretty quiet overnight, a little bit lower. Outside markets, you have the stock market that should open higher. Crude's a little bit higher. As far as the grains are concerned, you see a lot of articles written about how we're stuck in a trading range. Some people think the May beans are between 875 and 895, May corn 360 to 380, and May Chicago wheat 460 to 480. Prices are too low for farmers to sell here in the United States and too high to stimulate any new demand, especially on the export side. The bears who are looking at bigger carryouts, slower demand, feel the closer you are to the higher end of that trading range as U.S. farming usage makes some additional cash sales. Chinese soybean, meal, corn, soybean oil, and palm oil futures are all lower. There was a report that China is starting to sell some of its aging reserves into the domestic market, which could put some pressure on domestic Chinese corn prices. Brazil harvest for soybeans is advancing. Farmers are selling beans, and so far the export logistics pace is satisfactory to keep movement of grain out of Brazil. Yesterday we had a lower crush than we thought. We think the U.S. soybean export pace is slower than what the USDA is saying, which means lower demand, higher carryout, and possible for lower prices. But again, the farmer continues to be a tight holder of his 2015 inventory until he sees the summer weather pattern. Next 2 weeks, U.S. weather should be warm and dry. No one's really trying to expand that into the summer, but there are a few out there that thinks that the pattern is very similar to the 1983 dry weather conditions late in the summer. We got the cattle on feed report, should be about 100% placements at 99. We continue to see some substitution of sorghum in the Southwest for corn feeding. Demand for U.S. DDGs, bean, meal, and wheat exports remains slow. And for the next 30 days, we have a small window where our corn prices globally are competitive. We'll see if we pick up any demand. So we're also noticing that negative ethanol margins, higher stocks, could mean a slowdown in production. The weekly report on ethanol stocks and production will be delayed until tomorrow because of Monday's holiday. Winter wheat crop, it's going to be warmer and drier over the next 2 weeks. We could see the crop come out of dormancy. Conditions are pretty favorable right now, plenty of moisture, and we don't think we'll see any cold temperatures that might stress the crop. Traditional funds were buyers of beans, meal, corn, wheat yesterday, sellers of oil. Continue to have a short position in the markets except long soybean oil. So again, markets are quiet. I think we're in a trading range, and they'll probably stay in that trading range until we get into the U.S. spring and summer weather patterns. As always, these are my thoughts and not those of ADM or ADM Investor Services, and have a safe and profitable trading day.